Hello everyone, welcome back to this lesson where we are looking at another two candlestick formation that is bullish. This one we call it the bullish engulfing pattern. So again we start off with a downtrend. So the price is trending downwards, making successive red candles. Then at some point you are going to have the price opening at the lower end of the previous candle. So in other words, it's almost looking like the price wants to continue in a downward trend. Here in this case, we've got a wick, which means the price went all the way down to the tail end of the wick. However, buyers started to dominate the sellers, and the buyers were able to push the price upwards. Now, not only did they push the price upwards, they pushed the price to close above the previous red candle. Now, ideally, the place to look for these formations of candles, if I may reiterate, is that the price has to be in a downtrend, and the price would have reached some point where you might have the area of strong support. So once you see an area of strong support and you've got a bullish engulfing candle forming, then you now take a look because there's a lower risk of entry and a higher probability of greater rewards when the price resolves. So what you're looking for is that the price would be trending above the pattern of these candles. So here the pattern ends with the highest price or the closing price of the green candle. Once you start trading above this level, then you are looking to enter the trade where you've got a high probability that you're going to turn a profit. Before that, you can enter, but it will be a risky trade because the price might reverse onto the downward side. Every formation is not certain that the price will continue going up, so you should be prepared to make a lower risk entry with a higher probability of making a profit. Again, remember we spoke about addition of candles. Like even in this case, we can add these two candles to see how they resolve. So we are going to take the opening price of the red candle. It becomes our opening price at this level. Then we are going to take the closing price of the green candle, which we are going to set at this level. Then we are going to look at the highest price of the formation, which happens to be the closing price of the green candle. Then we are going to look at the lowest price in the formation, which would be the tail end of this formation. So then we are going to draw a tail that extends to the downward side up to this level of the price. Then we are going to resolve our candle. So now we have got a candle that resolves to a hammer. However, unlike the previous piercing pattern, this hammer is not a red hammer because we are closing at this part of the green candle, which is going to form the head of the hammer. So this portion is a green candle formation. So a bullish engulfing resolves to a green hammer when we add the two candles, which is extremely bullish compared to the piercing pattern that we looked at previously. A piercing pattern resolves to a red hammer. A bullish engulfing resolves to a green hammer. Again, when we are looking at entering into a trade, we are considering any trade in this region going upwards, because this will have confirmation that the price indeed is going to continue to go on an upward trajectory. So we can expect to be able to make a substantial profit once we enter on confirmation. So once again, you can open charts and add the candles and look at how they resolved into these trends. We'll continue to look at more candles in the coming videos for other patterns that we have with candle formations. Thank you for this time. Till we meet again. Goodbye.